NIO closed the reduced trading session on Friday at $5.50, up roughly 0.73%, in what became a quiet but interesting finish to the week. After several sessions marked by choppy movement and intraday reversals, today's close reflected a slight shift in tone, even if the overall picture remains complicated. With US markets operating on a shortened post-Thanksgiving schedule, liquidity was limited and volume was lower than usual, which often exaggerates price movements in both directions. Today, that worked in NIO's favor, giving the stock a modest lift after an extended run of volatility. The day began without much fanfare, but the stock managed to climb gradually as the session progressed. The move was not driven by any major announcement from the company itself, but rather by a combination of lighter selling pressure, pockets of bargain-seeking investors, and the typical dynamics that occur when trading happens in a thin volume environment. When fewer market participants are active, even a moderate amount of buying interest can tip the balance upward, which appears to have played a role in today's gain. Adding to today's upward shift was an analyst call that came through from Freedom Capital Markets. The firm upgraded NIO from a hold rating to a buy and increased its price target to $7. While this upgrade was not met with explosive movement, it contributed to a subtle improvement in sentiment, especially among those watching for any signs of changing momentum. Analyst upgrades often act as psychological markers, nudging investors to rethink narratives or evaluate whether stock may have been overly discounted. Even if the market does not fully react in the moment, such moves can influence short-term behavior and attract attention from traders looking for potential turnaround signals. The upgrade was likely noticed by investors who have been monitoring NIO's recent financial performance. In the most recent quarter, the company reported narrowing losses, improved sales, and signs of stabilization in gross margins. Delivery numbers have remained strong, with multiple months approaching or exceeding new record highs. These operational indicators create a foundation that contrasts sharply with the recent downward pressure on the share price. The disconnect between NIO's business performance and its stock performance continues to stand out, and the analyst upgrade acknowledges that tension by pointing toward potential upside should sentiment and macro conditions improve. That disconnect is a central theme for NIO right now. On the one hand, the company continues to execute on several fronts, expanding its battery swap network, launching new models, progressing with its multi-brand strategy, and increasing deliveries. On the other hand, the stock has been weighed down by broader concerns affecting Chinese electric vehicle manufacturers. These concerns include intense price competition in China, geopolitical tensions affecting Chinese-American depository receipts, and investor skepticism regarding long-term profitability. These macro pressures have created an environment where even strong operational updates fail to produce sustained upward movement in the stock price. Friday's session, because of its reduced trading hours and lower volume, provided an unusual moment where the noise of heavy trading was subdued. In such sessions, price movements often reflect more of the underlying sentiment that emerges when the market is not reacting to constant news flow or high-frequency trading activity. The modest bounce today suggests that despite all the concerns and recent selling pressure, there remains some willingness among investors to accumulate shares at lower levels, or at the very least, reduce the aggressive selling that dominated previous sessions. The intraday price range on Friday fits this narrative. With the stock moving between approximately $5.43 and $5.62, the trading behavior reflected a tug-of-war between caution and opportunism. The early part of the session showed hesitation, but as the day went on, the reduced selling pressure allowed NIO to drift upward. The stock was not able to produce a major breakout, but it did demonstrate that buyers and sellers have reached a more balanced state than earlier in the week. This raises an important point heading into the weekend. Thin volume bounces do not necessarily signal the start of a recovery, but they can indicate that selling momentum is slowing, at least temporarily. Investors may treat these kinds of sessions as opportunities to reassess whether the recent decline has been overextended. With the stock trading near multi-month lows, any sign of stabilization draws attention. Whether this leads to sustained momentum will depend on what happens next week when markets return to normal volume and liquidity. Market participants will also be watching for broader signals from the global electric vehicle sector. Chinese manufacturers have been under pressure, not only due to competition within the domestic market but also because of shifting sentiment among US investors. Concerns about regulatory action, tariffs, and economic recovery in China continue to cast a shadow over the sector. These are not issues that will be resolved quickly, and they contribute to the cautious tone impacting NIO's share price. Despite this, NIO's operational achievements remain notable. The company continues to deliver vehicles at scale, invest in charging and battery infrastructure, and develop its multi-brand strategy, including the progress of its new Firefly brand. Firefly's move into right-hand drive production and its expansion into Singapore represent strategic steps that position NIO for future global growth. These developments do not impact the stock immediately, but they form a narrative that becomes increasingly relevant when comparing long-term potential with short-term pricing pressure. The contrast between today's quiet session and the larger strategic developments creates an interesting setup for a weekend analysis. Investors are not reacting to minute-by-minute fluctuations in heavy trading conditions. Instead, the market is in a pause state, offering more space for reflection. For traders, the key question is whether Friday's bounce is a signal or simply noise. For long-term investors, the question is how NIO's multi-year strategy compares to its current valuation and whether the recent price compression presents an opportunity. The upcoming week will likely provide more clarity. Once full liquidity returns, the stock may test whether it can hold the $5.50 range or whether selling resumes. The reaction from traders will depend on broader market conditions, any emerging news from China, and overall sentiment toward growth stocks. If markets stabilize, the analyst upgrade combined with NIO's operational performance could give the stock room to climb. If macro pressure continues, the recent bounce may fade quickly. Going into the weekend, the modest Friday move serves as a reminder that NIO is still attracting interest, even in a challenging environment. The stock remains highly volatile, but its ability to find some stabilization in a thin volume session indicates that not all momentum is negative. Investors will be watching next week closely to see whether this small uptick can turn into a broader stabilization or if it remains an isolated reaction to holiday trading conditions. As the weekend begins, the narrative around NIO is more nuanced than the share price alone suggests. The company continues to progress operationally, analysts are beginning to reconsider their outlooks, and sentiment may be slowly shifting. While the risks remain significant, the combination of fundamental execution, strategic expansion, and early signs of stabilization creates a complex but compelling picture heading into next week.